Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program. Last week, markets were very volatile. So that's because US markets started correcting because of some positive economic data. So positive economic data is not good for markets because they expect more interest rate hikes going forward. So Nifty future went very close to 19,000. I think it is 18,999 something. In Singapore, it was more than 19,000. Then started a normal correction. And now what started as a normal correction, on Friday, it was aggravated. And why? On Friday, I was just watching, the IT stocks are falling. IT index has fallen nearly 3%. And HCL technology fell more than 6%. So later I understood that HCL technology came out with a poor guidance going forward. So that was the reason why HCL technology came under severe selling pressure. And when HCL technology was sold off as a collateral damage, other stocks also fell. But sometimes this kind of unwanted news in between, so this is not the time they declare the results. So when they declare the results, they should give the guidance. So all of a sudden in between, sometimes this kind of poor guidance is really to help some people to buy large quantities of their shares without disturbing the market. So stock market, anything can happen. So we have no control over it. So otherwise, like when the market is at all-time high, bank index is at all-time high, and IT index is trading very much lower. And on top of this news has made some impact on the downside. So last week it was a completely divergent trend. So last week Nifty has fallen about 250 point, I think, in the last 1 week from last Friday to this Friday. So Nifty has fallen about 250 point, but Bank Nifty was up by 450 point. So Bank Nifty going up 450 point would have contributed roughly about 200 point for Nifty rally. Despite that, Nifty has fallen 250 point. So that means if you exclude the banking stocks, Nifty has fallen about 450 points. And that's a big correction, I would say. So it's all like Reliance, Infosys, TCS, all the IT stocks, and Reliance has made a big impact. So Reliance, anyway, it was expected. So you may remember I told you now the Reliance has come very close to the upper end of the trading range, 2,800. That's why I sold 2,900 and 3,000 call option. So now Reliance is also coming under selling pressure. So election results, so it was a mixed bag. So though markets were euphoric initially, in Gujarat BJP has won, but not to forget, in Gujarat BJP won, in Himachal Pradesh Congress won, in Delhi Municipal Corporation Aam Aadmi Party won. So it was a divergent trend there also. So I was hoping that Nifty to trade between 18,500 and 19,000 throughout the week, and that is what exactly happened until Thursday. This Friday, HCL technology guidance was, has created a dent in the hope that Nifty finally broke 18,500 in the spot. And of course, in the last 40-45 minutes, so there was some recovery. Nifty recovered about 60-70 points, but Bank Nifty recovery was even more fantastic. I think the Bank Nifty has recovered more than 300 points in last 45 minutes. So another significant thing on Friday, the premium of Nifty future over Nifty spot has started coming down. Earlier it was about 150 points, now it is coming to 100 to 120 points. So still this 100 to 120 point premium is also very high. Normally it should be about 40 to 60 points. So you may remember few weeks before I told you, as and when I observed huge premium in the Nifty future over the spot, uniformly markets went for some kind of a correction in the next few weeks. So that is what has happened. Now on the first trading session of this December series, Nifty future was 150 point premium, and now from the December month high to Friday low, Nifty has already corrected about 500 points, and that is a decent correction, I would say. Now looking at the open interest for the coming week, 18,600 call option, 18,700 call option added huge quantities in open interest. But in monthly options, however, 18,000 put has the highest open interest among the put options. 19,000 call has the highest open interest among the call options, and so the monthly range 18,000 to 19,000 is still intact, but weekly range was violated. So monthly no issues, but weekly coming week I would say is going to be very, very volatile, and more volatility is likely to come. Why? Simple, there are too many data. Number one, on Monday our inflation data is due, consumer price inflation data as well as index of industrial production data. Of course, the expectation is that the inflation will cool down further. So usually when the inflation cools down further, the banking stocks do well. So that is evident from the price action of Bank Nifty. So despite Bank Nifty being traded at all-time high, still there is a lot of strength. But other stocks only dragging the markets down. So this is about inflation data and IIP data from India. That's more or less not a big event. But what is the most important event in the coming week is the consumer price inflation data from US, which comes on Tuesday. So a simple analysis, if you look at the last many months, let us say last 6 months, and every time when the consumer inflation data came, US markets moved more than 3%, either upside or downside. There was one time even US markets moved more than 5%. So this is going to make US markets very, very volatile. Not only that, Tuesday is the consumer price inflation data, Wednesday is the Fed decision. And probably this is the first time the time gap between consumer price inflation data and US Fed meeting is very, very narrow, just one day. Although it has known that Fed will hike the rate 50 basis point, and that is already been factored in, but what the Fed chairman is going to speak after raising the interest rate? Because for the last few economic data, are not favorable to markets. So if he talks slightly hawkishly, still data is looking very good, economy is not coming down, we may have to raise the interest rate further, so the market sell-off may come. So both Tuesday as well as Wednesday, US markets are likely to move very, very violently, and also coming week, Friday, that is the 16th of December, is the quadruple witching day. I think that is the third Friday. Yes, correct. So the third Friday of December is a quadruple witching day. So usually markets tend to be hugely volatile on a quadruple witching day. So Monday, consumer price inflation data, IIP data from India. Tuesday, consumer price inflation data from US. Wednesday is a Fed meeting, and Thursday I think there is some retail sales data in US. Friday, quadruple witching day. So markets are going to be hyperactive during the next 1 week. However, once that is over, the following 2 weeks may be of a lackluster trading in Indian markets. Usually last 1 or 2 weeks, FIIs will become less active, markets won't be making bigger move. So coming week, so too many data, too much of movement is expected, and we also have to see when the Nasdaq is getting lower and lower, so that will be impacting our IT stocks here also. So we see the next week trade is going to be very, very interesting. And however, I'm still hoping that although 18,500 is broken, so I'm expecting the market to quickly recover to go above 18,500, and then once again going back to 18,500 to 19,000 range for the coming week also. But just because of too many data, it's going to be difficult to predict the range. So, but for monthly range, 18,000 to 19,000 is still intact. So right now, stock specific, is once again you have to look at stocks like Axis Bank, Bank of Baroda, which are looking very, very strong. And for weaker stocks, it's only the IT stocks right now. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.